Hello and welcome to this weekly market recap report for the week ending Wednesday, July 16th, 2025. Just a reminder, we are looking at this from the close on Wednesday, July 9th through the close on Wednesday, July 16th. I just want to make sure everybody is aware of that. It was quite an interesting week. This past week, we had earnings season kickoff. We've got some great earnings that have come out this week. Some of which have had a little bit of a muted response, but we'll go over some pretty good ones that I've seen so far this week. Also, a couple big inflation reports out this week. We had the June CPI, the June PPI, both coming in, CPI slightly below expectations. The PPI was very benign, came in flat on both the headline and the core number. And so as a result, there's still some speculation out there that, we're going to get cuts, just a matter of whether or not the Fed will start cutting later this month. Most folks say no. I say maybe. We'll see what happens later this month. But at least the inflation reports did come in somewhat benign. Like I said, on the CPI number, headline number was as expected, rising 0.3%. But the core number actually came in slightly below expectations, coming in at 0.2% as opposed to the expected 0.3% rise. So let's take a look at what happened in the market over the course of the last week. You can see the Nasdaq was the best performer, but it was barely up. S&P 500 almost as flat as you can get. Dow Jones, transportation, both down about 0.5%. And then the laggards over the past week, the Russell 2000 and the S&P 400 mid-cap index, both of those took sizable hits on Tuesday after the CPI report had come out. Because even though the CPI, the core CPI, came in better than expected, it was higher than the June 2024 reading. So when you strip out June 2024 and then add in June 2025, it actually made the annual rate of inflation go up a tad. And I've got a chart, and I'll show you that in just a bit. But I think that may have spooked some folks in the small cap arena, but I don't think it's anything to worry about. We did have a pretty nice rally back on Wednesday in that area. So again, we'll look at those charts in just a second. Moving on to the sectors, real estate, industrials, technology, discretionary, kind of a little bit of a mixture there in terms of leadership, but really not a whole lot of strength anywhere. We had bifurcated. It was a bifurcated week where we had 5 sectors higher, 6 sectors lower. The real weakness was in energy and materials, where you can see we saw more than a 2% drop in both of those sectors. Otherwise, there wasn't really a whole lot going on, just a little bit of rotation back and forth in some of the other areas. But I will say it wasn't a wholesale move into defensive groups, so that was a good thing. I mean, we did have industrials, technology, and discretionary. 3 of the 5 aggressive areas did finish up for the last week, and they were among the top 4 sectors. So all in all, just kind of an okay week for a market that went mostly sideways. S&P 500, you can see since the beginning of the month, literally has been going sideways. We nearly had a 20-day test on the weakness on Wednesday, came back up off of that very strongly. Same goes for the Nasdaq, getting close to that 20-day moving average and then bouncing. The small cap IWM actually printed a hammer off of the recent downtrend, going below that 20-day moving average and then coming back up and closing above it. That was one of the things I had pointed out to our members at EarningsBeats recently. That's kind of what I was hoping to see. I wanted to see a move below the 20-day moving average with a close back above it. So this was another successful test of that rising 20-day moving average, very similar to what we saw in the 3rd or 4th week of June, and then again in the latter part of May as well. So, having those false breakdowns and then recoveries does give me some confidence in the short term. Maybe we've seen the low. I just think with options expiration week, and also just this upcoming week historically is one of the weakest of the calendar year, historically dating back many years, several decades. And so that maybe makes me think maybe this is just going to be a little bit more consolidation here in the very near term. Transports also were weak on, they've been weak really over the last few days. You can see got down, tested that 20-day moving average, like the small caps did bounce up and come back up from that, which was good news. All right, here's a chart of the consumer price index. This is the core consumer price index. The top panel here shows you the actual index value over the last 50 years on a monthly basis. Of course, it comes out monthly. The next panel here shows you a 1 month rate of change. So you can see that the last month was, June came in 0.23%. If you went back to see June of 2024, we were at around 0.1%. So that's where I was saying by removing June of 2024 and then adding in June of 2025, the trailing 12 months, actually you see a little bit of an uptick here in the inflation rate. And I think, again, that may have spooked some folks on Tuesday, but then with the PPI coming out today, benign, we saw money rotating back into some of the areas that were hit hard on Tuesday. So all in all, like I said, it was mostly a flat week, a little bit of underperformance in small caps, mid caps, but otherwise pretty much a flat week. 10-year Treasury yield on Tuesday, with that news that inflation had ticked up a little bit, we saw a lot of folks selling out of bonds, and as a result, we saw the yields rising. So the yield jumped from a low under 440 to a move up near 450. But then again, with that PPI coming out on Wednesday, tamer than expected, we saw the 10-year Treasury yield drop back a little bit. I wanted to go through and just show you a couple of areas of the market that I think are worth focusing on right now. One of these areas is the gambling group. Since that April low, you can see the gambling stocks have done very well. But from April to June, even though they were doing well, they were just kind of going along with the S&P 500. And so down here on this relative chart, you can see that those first 2 months when the group was rallying, we were just kind of going sideways, not really outperforming the S&P. So it was almost like the S&P was picking up the group and carrying it higher. Over the course of the last 5 or 6 weeks, however, this strength has actually been, the strength in gambling stocks has been showing some leadership. And so you can see the gambling relative to the S&P 500 has been rising over the last 6 weeks. So I just wanted to point out that strength because we did have a company, I'll show you, or I'll talk about it in a couple minutes, that reported earnings after the bell today, and the stock was up over 13% after hours, and it's part of that gambling group. So it's been one of the better earnings reports out so far this week. So I'll talk about that in just a couple minutes. But I wanted to point out that gambling stocks definitely have been showing a lot of strength, showing some momentum here. So if you're a momentum trader, that's a group you might want to take a look at. But here are some other groups that I think you should take a look at. Here are the semiconductors. Every one of these charts I show you are going to be a 3-year weekly chart showing you how the group that I'm talking about is performing relative to the S&P 500. This is semiconductors. I mean, absolutely flying. Then we've got software. Software coming off the February, March lows, continuing to show relative strength. Then we had electronic equipment. Look at the relative strength in the electronic equipment group. Then let's pull up electrical components and equipment. Look at this relative strength. This is why technology is doing so well right now. Then we had toys. This is in the discretionary area. But look at the toys group showing a lot of strength. Then we've got, and to give you an idea of maybe the other side of the coin, areas of the market you don't want to be in, look at something like specialized consumer services. Look at the relative weakness of this group versus the S&P 500. If you're trading stocks within this group, you are literally trying to swim against the current because this whole group has just been getting absolutely bludgeoned. And so we've got to, make sure that if we're trying to outperform the S&P 500, you want to stick with areas that are showing relative strength. So hopefully this is giving you some ideas. Another group that looks really good to me has been recreational services. Again, look at the relative strength there. A couple others. Let's go with specialty retailers. Another one. Relative strength coming down just a little bit here over the last week or so, but clearly you can see it's been strong for quite a while. Travel and tourism on a relative basis been showing a lot of strength as well. Let's see, another one would be heavy construction. Let me see if I can find that one here for you. Before I show you heavy construction, look at business support services. Look at it going down the other way. Heavy construction, look at the relative strength there. So this is where you're getting a lot of the momentum. So again, if you're a momentum trader, looking at this relative strength Finding the industry groups that are really strong will help you. Aerospace, another group that's been absolutely on fire, breaking out again. And then the last one I have, investment services. We just got a report out of Goldman Sachs. Goldman Sachs has been doing extremely well. And look at the investment services group continuing to show a lot of relative strength. Now, I showed you a couple to the downside. Let me just give you a couple more here real quick. Home improvements. This area has not been very good. Home improvement retailers. I mean, just absolutely falling through the floor there. How about insurance brokers? That's another really, really poor group. Insurance brokers right here. Look at this. I mean, it looked great heading into March, and ever since March, really when the market bottom started coming back up, this group's actually way down from where it was in March on an absolute basis, and then on a relative basis, you can see it at a 3-year low. So you want to stay away from these kinds of groups. Give you one other thing here as we move over to earnings beats. If you are new to earnings beats, if you haven't followed us before, make sure you check us out. We have a 30-day no-cost trial. You can click on that green button. You get yourself set up there. Also, we have a free newsletter. If you go down to the bottom, there's no credit card required. Name, email address. We'll get the EB digest out to you. Normally Mondays and Wednesdays. Today it did not go out. So if you were looking for it, didn't go out today. It's going to go out in the morning tomorrow. So you'll have one for tomorrow morning. The other thing I wanted to point out here is there is a group that I absolutely love. And I think by the end of this year, this group goes up 50%. If you go over to our website at EarningsBeats and you click on this link, it will take you to a landing page. All you need is your name and your email address, and I will send you roughly a 15-minute video. Not only giving you the group, but explaining exactly why I think this sets up for a big move, just like it has set up in the past for big moves. And I'm going to show you exactly what led to those big moves in the past and what I believe is going to lead to it again in the current year and into 2026. So please make sure you go over to earningsbeats.com, click on this link, sign up for this. I will send it to you free of charge. There's no credit card required, name and email address. That's it. And we'll send it to you. So make sure you take advantage of that. Let's move on. One last thing I want to go over and wrap this thing up. I want to go through some of these earnings reports. So we've had a number of reports come out this week, even though we're only into day 3. Here's Fastenal. Fastenal came out. Every one of these companies I show you beat Wall Street estimates as to both revenues, quarterly revenues, and quarterly earnings per share. So these are companies that are really operating well on a fundamental basis. And then also, for the most part, you're going to see some pretty nice performance on their charts as well. So Fastenal, you can see the AD line was moving up. They reported Monday morning, so all of this action the last 3 days has come post-earnings. Had a nice little pop. Even though this group was already trending up, we added on to it with its earnings report. BK, this Bank of New York Mellon Corp, AD line going up. This is also one of the stocks we have in our income portfolio right now at Earnings Beats. We love this company. They came out, like I said, beat top and bottom line, and the stock gapped up, sold off intraday, and then came rallying back into the close and closed at another high. So BK looking good. Citigroup had one of the best reports that I've seen so far in the banking area. Had a nice gap up as a result. Sold off a little bit today on Wednesday, but then rallied back. So another really strong looking chart there with Citigroup. HWC, this is Hancock Whitney Corp. AD line's been pretty strong. This one actually went down below the 20-day moving average. So we had a little bit of a negative reaction, but we managed to come back in, and that was a long-legged doji, essentially, with a huge move to the downside, coming back up and rallying and finishing pretty close to the open. So HWC, I think, looks pretty good here. JP Morgan, can't leave this one off. Another great report. Stock had already built in a lot of good news. So I think with the news, and it's just maybe a little bit of a sell on news kind of a situation, but I do believe JP Morgan heads higher. PNFP, this is Pinnacle Financial Partners. Another one that broke down intraday below the 20-day moving average, but then came back up. I think looks strong here. STT, this is State Street Corp, gap down below the 20-day moving average, rallied on Wednesday, did still stay above the breakout from that high that we saw back in late January 2025 right here. So has pretty good support somewhere around that 100, 101 area. And then, of course, you got the 50-day moving average coming in right underneath that as well. WFC, that's Wells Fargo. Another one that came out with good numbers. We got a gap down, a little bit of sell on the news kind of situation, but I think that creates an opportunity. Many of these stocks, by the way, I haven't been talking about it, but you can check these out. Many of these stocks showing really strong AD lines, which I find very encouraging. FHN, First Horizon National Corp, again, another strong AD line, trying to get through 22 to 22 and a quarter. That's a key area of resistance. But this test back to the 20-day moving average so far successful. Looks like it probably wants to go higher. Goldman Sachs, also nice report. It sold off a little sell on the news. There was a lot of good news built into this one. You can see the massive rally heading into its earnings report. So don't be surprised if it sideways consolidates for a while, but that was a really good report. And again, longer term, I expect it to go higher. Johnson & Johnson, big report. Pharmas have not been doing very well, but Johnson & Johnson gave them a lift today with a big earnings report. The stock up more than 6%. And you can see again that AD line strong. We do need to negotiate about 166 to 167. That area of resistance has been tough to close above. So we'll continue to try that. Morgan Stanley, gap down, but it had a nice little hammer right on its 20-day moving average. That one looks to potentially rebound from here. PLD, when you look at it, you might say, well, what's so good about this? You know, it's been downtrending, had a gap up, but couldn't sustain it. AD line's just okay. But Prologis, if you look at it relative to its peer group, you can see the stock is actually showing a 52-week high relative to its peers. And on this uptrend, check out the volume that's picked up. So we've got nice volume trends. It's a leader. The big problem is that its industry group is at a 52-week low relative to the S&P 500. And that's why it's so important to try to find leading stocks in leading industry groups because they will perform better. This one's been doing about as good as it can, given the fact that its industry's in the dumps. But overall, it still remains one of the leaders. And if the money starts to rotate back into this group, then it'd be easier to see the stock maybe moving up to 52-week highs. But I did want to mention it because it was a strong report and it is showing nice relative strength versus its group. The last one I wanted to show you, another bank. This is PNC. Again, AD line's been strong. This one on a relative basis is just starting to show some strength relative to the banks. I'd like to see it break back out again to another new high in July. We'll see if we can do that. But there has been a lot of volume coming in here on this latest push and on this relative strength. So I have some hopes that PNC is just starting to show some leadership here in the banking group. All right, after hours, last thing I want to talk about. In after hours, there was one stock that came out, MCRI. This is Monarch Casino and Resort. It's in that gambling area. And you look at the chart, the AD line's been pretty strong, showing potential accumulation. And as of early June, we were at a 52-week high on a relative basis before we kind of settled back a little bit. And this is one that doesn't trade a lot of shares. So that might, scare some of you as well. It certainly would give me a pause or a reason to pause and maybe, think about it. But I want to show you the after hours action. Of course, by the time you're getting this, it'll be Thursday during the trading day, and you can look and see how the stock is doing. But in after hours, you can see now it's up 15%. It was up 13% when I started the show. Now it's up 15%. Really, really strong reaction, great earnings report, and in a very, very strong group that is beginning to show a lot of leadership in that gambling area. Anyhow, that is it for me. I really appreciate everybody tuning in again this week. I still think the market is set up maybe to go sideways a little bit. I can't bet against this market. I'm seeing no signs. I showed you the relative weakness of a lot of industry groups. If I had gone through all of the defensive sectors, you would have seen almost every one of the charts going down on a relative basis. Money is not rotating into defensive areas. Money is sticking with a lot of the aggressive areas. That is not a signal that this market is poised to roll over. Wall Street would be positioning out of these aggressive areas, and instead they're positioning in. So any short-term weakness is likely due to seasonal patterns, maybe options expiration, but I don't believe it is anything that's going to stick. So with that, have a great week, and I'll be back next week to do it all over again. Happy trading, everybody.